when AI makes the economy look buff, but it skipped leg day. From 2020 to 2024, central banks kept interest rates near zero, making money incredibly cheap. Governments and corporations went on a massive borrowing spree. But to combat soaring inflation, they've aggressively hiked rates at the fastest pace in decades. Now, a wall of that debt is coming due, and refinancing will be brutally expensive. The entire global economy is walking a perilous tightrope. From emerging markets to advanced economies, one shock could wobble global bond markets. In 2025, AI is pumping up productivity, profits, and market hype. But it may be hiding weaker fundamentals, like a beauty filter for the economy. When AI makes the US economy look buff, but it skipped leg day, a tech-fueled surge is pumping up productivity and profits, making markets soar on the promise of an AI-driven future. But this glow-up may be hiding weaker fundamentals. Beneath the hype, we see slowing consumer demand, shakier labor markets, and investment gaps in non-tech sectors. It's like a beauty filter for the economy. The risk is this AI-powered illusion could shatter, revealing an economy less prepared for a downturn than headlines suggest. When AI makes the economy look buff, but it skipped leg day. In 2025, AI is pumping up productivity and market hype, creating a dazzling spectacle of growth. But this is a dangerous illusion, hiding soaring interest rates and a fragile global debt crisis. Follow Econmatrix for daily global economy news in 30 seconds.